Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple, Spotify, or Google, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. This content is brought to you by Uphold, which makes crypto investing easy. I've been using Uphold since 2017. They're one of my go-to exchanges. They have 10 plus million users, 250 plus cryptocurrencies, and they're available in 150 countries. As with all exchanges, you can buy and sell on them, but I highly recommend you custody your own crypto, not your keys, not your coins. All right, my friends, it was a green day for the crypto market, looking really good here. Bitcoin saw a pump. It went over $19,000. And it is up near 12% from a 7-day perspective, up near 8% from a 24-hour perspective. Ethereum also looking strong at $1,426. BNB is at $286. XRP currently at just over 37 cents. So we are seeing a move upwards. But is this a bull trap? Is this some sort of fake out, right? This is why we need to be cautiously optimistic. I'm happy to see the prices moving up, but let me break down a few things. Many of you know I've been sharing my Bitcoin chart and trading view showing that we are due for a retracement, and that can go to about $30,000 or $40,000. When that happens, though, is the key. In 2019, after the 2018 bear market, we saw that take place around May into June, into July, actually, of 2019. A similar scenario and pattern could play out this time around. It's not going to be exact, but we are seeing that we are near the bottom, if we haven't hit it already, for the crypto market. And we've been in a max pain zone where it's just been choppy and prices have been, just rolling over to lower lows. So we're seeing a green candle here for Bitcoin, and it broke through the $19,000 resistance. But that doesn't mean tomorrow and next week we're going to $30,000. This could still be a very slow grind until maybe May, maybe June, and then we see that run up to $30,000 to $40,000 where we have the retracement. That's a scenario. The issue is, no one has a crystal ball to tell when this may happen, but you can be prepared, right? If you've been buying the dips, dollar cost averaging, and you want to swing trade when this goes back up to 30,000, you can certainly do that for Bitcoin and, of course, some altcoins. So that's how I'm looking at it. I'm very happy to see the price going up, and we'll have to be patient and see how things play out. Now, I tweeted about this, by the way, guys, that, once we break through this resistance, we could go to $30,000. If you don't follow me on Twitter, please do. I did want to share this macro chart from Stock Money Lizards. They do some great Bitcoin analysis. And here from the macro chart, you're seeing that we're down 77% from the all-time high, and we are in the accumulation zone. Now, the previous bull market of 2017, Bitcoin fell 84%. And this is why I'm saying we may not be at the bottom yet, but we're close to it. So I hope we've hit the bottom, but there's a likelihood we could go a bit lower. Maybe Bitcoin goes to 12K. Then that's the ultimate bottom. And then we start moving up slowly. We'll just have to wait and see. And the point is, be prepared for all scenarios. No one has the silver bullet answer because we are dealing with markets and no one has a crystal ball. So these are the different scenarios I'm looking at, the thesis that I've formed, and I'm prepared for all of them. But from a macro perspective, I'm just accumulating and I'm waiting for the next bull market. And yes, I may take some profits if Bitcoin retraces to 30K, 40K, and just wait and continue to accumulate for the 2024 halving when I believe the next bull market will ultimately start taking off. So that is what I'm looking at, my friends. And here we got news that CPI numbers are down. It's down from 9.1% last June to 6.5% in December. That's good news. This is what the Fed has been trying to do. And we know that ultimately they're going to pause rate hikes sometime this year. We see they're ramping down. The probability is that they're going to do 25 basis point rate hikes for the next maybe few months or the first half, and then they pause in the middle of the year. So the next FOMC meeting is February 1st. this is important because we know, no one's putting money in assets right now at a large scale, because if the Fed keeps raising rates, it's hard to get capital. And obviously, it's going to put a crunch and a squeeze on the economy and investing and so forth. So we want the Fed to stop raising rates. We want inflation to go down, and we want them to then eventually move into cutting rates. And we know the way the system is set up, the economy and the financial system, they're going to start printing money again. And that could happen in 2024. And then the same cycle repeats. As they print more money, asset prices go up, right? And here, the DXY, the US dollar currency index, we see the DXY is correcting heavily. And historically, when that is happening, when the DXY is correcting and going down, asset prices are going up. When the DXY is going up, asset prices values are going down. So we're seeing the alignment to the light at the end of the tunnel, and that is going back into a bullish market. Now, it doesn't happen overnight. It doesn't happen next month. It takes time. It can take another year, but we're headed in that direction. So I believe we're over the hill, so to speak, and the Fed is ramping down. Inflation is coming down. The DXY is correcting, and we're seeing a breakout in asset prices. That does not mean that you may not see another big crash or more pain, but it's just choppy. It's going to be a roller coaster ride until we get back to the kind of the normal bull market sentiment, where things are moving up slow and steadily versus, slow and steadily crashing. So we want to get out of this bear market crash zone, so to speak, and get back into the bullish zone. So that's how I'm looking at the markets, guys. That's how I've looked at it historically to make money. It's essentially dollar cost averaging, buying the lows, hodling, and just being patient. You got to be patient. You got to leave your emotions at the door. If you're investing with emotions, today we're up green. Oh, yeah, bull market's back. No, not necessarily. That's not what the charts is necessarily saying. That's not what the market cycles are saying, right? That's not how it's played out historically. We do have some years to go here, but you can still make money with some of these bear market rallies and also retracements, which is the retracement is what I'm looking for primarily this year. I don't necessarily care about the bear market rallies. I don't have time for that. But if you have a big move up, like Bitcoin going to 30, 40K, I will take some profits there and then, continue to accumulate for the ultimate new all-time highs in 2025. All right, guys. I want to move ahead because, regards to potential catalysts that could drive the prices down, there are still some of those things lingering out there. For example, Digital Currency Group, right, which has issues with Genesis Trading, which is holding a lot of Gemini earns capital near $1 billion. Here, we got a user who tweeted out the following update: DCG/Genesis liabilities ballooned to beyond $3.1 billion, facing decisions to liquidate portfolio assets, which won't cover even 10% of the above sinkhole. Reminder said 2 months ago there was zero interest in their capital raise. So they've been trying to raise capital to bail out Genesis. It's not going well. So we'll see what happens here, my friends. I'm still concerned about this. I'm not worried about it. I'm just concerned because it could send the prices lower, right? It's that looming issue, a looming collapse. And I don't want it to happen. I'm just reporting the facts of what's out there. Once again, leave your emotions at the door. I don't care if you're a bear or a bull, whatever. What are the facts? And we're seeing this is a situation that has not been resolved. It is still, lingering. So we got to keep our eyes and ears open about it. And speaking of Digital Currency Group, Barry Silbert replied to a tweet earlier today. Someone tweeted at him saying, the $1 billion+ question is, when did Barry Silbert first learn FTX was insolvent? He needs to go on record with his answer. And he tagged CoinDesk. The user tagged CoinDesk, Business Insider, I guess this is, or Bloomberg Business, Wall Street Journal, Gary Gensler, and the Financial Times. And he said, many privately already know the answer. Barry Silbert tweeted at that and said, same day as the rest of the world. Man, I don't know. These are the things that worry me. I shouldn't say worry, that I am concerned about, with regards to these looming collapses. Now, we got some updates about Grayscale and their lawsuit against the SEC. So Jennifer Rosenthal, who's VP of Communications at Grayscale, tweeted out, Grayscale's reply brief is the next step in our lawsuit challenging the SEC's denial of the application to convert GBTC to an ETF. It'll be filed on Friday, so it'll be filed tomorrow. For now, our chief legal officer, Craig Salm, detailed highlighting progress made so far and what's to come. So here, I'll read some of what Craig put out, but it's a very long thread that he put out here. He said, Grayscale will soon file the next brief in our suit challenging SEC's decision to deny GBT conversion to spot Bitcoin ETF. The case is moving swiftly. While timing is uncertain, oral arguments may be as soon as Q2. Final decision in DC circulating appeals court, or I can't remember what that is, but could come by fall. He says a lot has happened in the crypto industry since we first filed our lawsuit in June 2022, but I continue to believe in the strength and merits of our common sense and compelling legal arguments. Our lawsuit is about determinations on the questions of law, despite the SEC's historical reluctance or current perceptions of the crypto industry. More generally, this is a legal case about fair and equal treatment under the law. Here's the thing, though, guys. I agree with Grayscale's lawsuit against the SEC about not approving a Bitcoin spot ETF. However, there's a lot that has escalated since they filed this lawsuit, such as under Digital Currency Group, a sister company of Grayscale, Genesis, failing, users not being able to access their funds. It's going to be very easy for the SEC and Gary Gensler to say, see, this is why we didn't want to approve the spot ETF. Their business is not in order. They're having problems, and we don't want to be involved or give them a spot ETF because they can't be trusted, right? The narrative is on the SEC side now because of what's happening, especially after all these collapses. And once again, a company, having issues under the Digital Currency Group umbrella. Grayscale is under that umbrella. So by association, it's kind of like guilty by association, right? It sucks, but I think Grayscale does have a solid case, but the narrative is not in their favor. So we'll have to see how things play out. And once again, I don't want to see Genesis collapse. I want the users of Gemini Earn to get their money back, right? We don't want to have people lose their funds. There's been a lot of losses last year, a lot of collapses, and we don't need more pain. We don't need more collapses. FTX itself was just massive. And we had Celsius, Voyager, Terra Luna, 3 Hours Capital, and so forth. So that's the news, my friends. Once again, I'm happy to see green on the market here. Let's hope this is not a bull trap. And let's hope this is a start of the move upwards to Bitcoin's retracement. And yes, it will roll over and correct, but it will continue to move into 2024. Into the Bitcoin halving, and then into the bull market of 2025. And I am excited, guys. I'm seeing the 4-year cycles playing out again, and exciting times, like I said. So let me know what you all think. You think this is a bull trap? You think this is, once again, the slow, steady grind, move upwards to the retracement for Bitcoin, and altcoins will follow? Let me know what you think. Leave your thoughts and comments below, and I'll talk to you all later.